Hey everyone, if you guys can hear me, why don't you please chime in to the chat box and let me know if you're hearing me loud and clear, okay? We'll get started here in just a minute. I think we got a few more folks coming. Okay, cool. Thank you, Alicia. Thank you, Renee. I think we got a few more folks coming. If you want to, if you don't mind, uh, drop a drop a message into the comments. Let me know where you're coming from. If you're local in Albuquerque, looking at houses here, looking to buy here, or if you're coming from elsewhere in New Mexico or outside of New Mexico. Just curious. It's always good to find out where people are coming from, where they're looking. It's uh, it's an interesting market right now. The pendulum seems to be swinging a little back into the direction of the buyers. I met with a few clients today. I met with a buyer yesterday, and the one thing that I'm telling people is the market right now is balancing out. And I don't say it's a buyer's or seller's market because it really depends on the dollar level you're looking at or the neighborhood or part of town you're looking at. Those are big dependencies. So it's really a balanced market. Um, so it's an interesting time. So let me give it just a few more minutes here. Let's give it till 7:04, 7:05. I see Renee is looking in Albuquerque. Awesome. Thank you. Lots of great neighborhoods in Albuquerque. I live in Albuquerque. I've been here for quite a while. Eh, since 2001. It's pretty good. It is the land of entrapment, but I love it. I love the weather. We're going to take the kids camping next weekend, and that'll be great. So yeah. Well, 7:04, I think that's good enough. Let me go ahead and get us started here. So so tell me in the chat box, tell me how you're feeling about buying a house. I would bet money it's gonna be likely one of here. I gotta make one quick change there. There we go. It's going to be one of these. Yeah, nervous, concerned, stressed out. Intimidated is what I hear from a lot of buyers sometimes. Anxious and uncertain. These are normal. You're not alone. Um, Look, the process can be daunting, but the one thing to remember is when you've got people on your side, when you've got a good broker and a good lender, a good mortgage person, you can do it. You don't have to go it alone. Keep in mind that usually a vast majority of the time, the sellers pay the commissions for your buying broker. So normally it doesn't cost any money out of your pocket to have a buying broker. So just something to keep in mind there. I hope that you'll have a good experience today. There's a link, there will be a link at the end to schedule a one-on-one with me. So what's my goal for tonight? It's pretty simple. All right. First off, obviously, I want you to feel a little more in control and at ease with the process. Look, there's a lot of moving parts. We're going to go over the process in a little bit, but keep in mind, keep this mindset. You can do this. Okay. What else? Know some of the pitfalls before you encounter them. You make a mistake in buying a house and it could cost you thousands in the process. It could cost you thousands down the road in repairs. So it's really simple. I want you to gain confidence and I want you to avoid those costly mistakes. Okay. Just real
Hello.
quick, today's webinar is going to be less than an hour.
Listening to a
And
webinar, first buyer, home buyers. Oh, yeah.
what's that? Hey, make sure to keep yourself on mute while I'm on here. We will have a chance to chime in and ask some questions throughout the presentation. Hang in there. Real quick. So what we're going to cover today, I'm going to spend some time. I'm going to go over the process. I'm going to spend several slides on lending because lending tends to be, even though I'm not a mortgage person, but lending tends to be one of the more complex areas. There's a lot of, technical verbatim that's used. So I want you to have a little more confidence and a little more ease in that. And then we're going to get into the mistakes to avoid along the way in those processes. You'll see what I mean. And then at the end, we'll talk about the resource links to help you get started, basically the next steps. Okay. So real quick, I just want to touch on I had showed you the slide a few slides back about how you might be feeling anxious and nervous. And I just wanted to show you these folks were in the same boat a few years ago. Jerry and Javier, I helped them both through the process. We got it done. I still talk to those guys today. We can get through this. So having a pro on your side, that's the way to go. So I hope you came today prepared to learn. We got a lot of slides, a lot of info, and we'll get into that right now. So real quick, I just wanted to introduce myself. My name is Bill Norman. I'm a real estate broker here in Albuquerque. I get my family up there. This is my why. That's our purpose. Everybody has a why. It's your driving force in life, I don't want to spend a lot of time on that. This is really about buying a house. So a few points that I do want to make relating to this slide. When you're going to select a buying broker, you want to look for a couple things. You want to look for somebody that's got that realtor all in caps and maybe even the little trademark R on the end. When someone's a realtor, then you know that they follow a code of ethics to always look out for your best interest. And they're doing continuous education so that they're always staying up in the business. That's a good thing, having a realtor. And then also look for somebody that maybe has the professional designations. I've got some additional designations on the buying side and on the selling side and in negotiations. I don't have to do those, but I did them to elevate my abilities for my clients. Just a couple quick points there. So, what are the steps? It's pretty concise. Number one, I mean, you came to this class and you're going to learn some of the basics. That's a good start. So, I think number one, find a realtor you like, get started with them, and they're probably going to get you into number two, and that is a pre-qualification. I'm going to go a little bit later. I'm going to talk about pre-qualification. Let me back up to number one, hiring a realtor. Keep in mind that as of August of 2024, they did change the rules, and you're typically going to sign what's called a buyer broker agreement. And it's a couple pages, and it pretty much lays out what they're going to do, what I'm going to do to help a buyer, but it also talks about commissions. And what happens is if that seller doesn't pay commissions, then it's on the buyer to pay those commissions. It's normally 3% of the purchase price. Now, at the beginning, you can tell your broker, I don't want to see a house that's not going to already pay your commission, Mr. Buyer Broker. And we say, no problem. I will only show you houses where that seller is going to pay my commissions. So that's something to keep in mind. Number two, I say pre-qualification with a mortgage broker, local in all caps there. The main thing I always recommend to buyers is try to find a local mortgage broker. There's some advantages. Number one, they're going to have these first-time home buyer qualifications, and then they're going to be able to connect you with some other home buyer incentives. You'll hear me a couple times in this process. I'm going to talk about MFA, that's Mortgage Finance Authority of New Mexico. Their objective is to get more home ownership in our state. We'll talk a little bit more about that later. So you've signed with a real estate broker. They're your buying broker. You've gotten pre-qualified. You can maybe afford 250 or 300. Great. Now you know what you can shop for. Now you're house hunting. And let me tell you, number three, that's the fun part, looking at houses. I tell people always, sometimes you really don't know what you don't like until you start looking. You'll start looking and think, oh, well, maybe I wanted a big fireplace, but maybe you don't. So that's the fun part. Look at a lot of houses, have them, unlock the doors, look at the numbers. If you got a good broker, they're going to give you lots of information. You're going to get to a point to where you're going to want to make an offer. You might make an offer, you might get a counter offer, you might be negotiating. Again, this is an area where a really good buying broker on your side is going to help guide you and hopefully get you the best deal they can. So, number four, your offer's accepted. You're now under contract. Okay. This can be a tense time because as soon as you get under contract, now you've got what's called contingencies. I liken these to hurdles in a race. You got to get over these hurdles, okay? So common ones, inspections and document review. If you have a lender, you have to get an appraiser. You want that house. Hopefully you're not overpaying and it meets appraisal. Some other ones might be, like I said, the loan approval, underwriting. And then what if you're not a first time buyer and you have a house that you have to sell? That's another contingency. So there's a lot of contingencies, a lot of hurdles to get over. Again, having a good realtor, this is where they earn their pay through this process because there's dates, there's deadlines. You have to stay on schedule. It's my job as a buying broker to keep my clients on schedule. So you get to number five, boom, you've closed, you're done, you move in. The nice thing is, my clients get I used to give steak knives. I don't give steak knives. Now I give home warranties. I just had a closing, Wednesday. This is Thursday. Yeah, just yesterday afternoon, I had a closing with a buyer and I handed him that warranty sheet and he was happy with it, man. Let's see here. So just quick Q&A. If you guys have any questions on process, on, where to start, who can help you start, when to start, the, the who part. Let me just comment on that. The two who's that are really going to help you: a good buying broker, a good realtor, and a good local mortgage broker. Those are going to be the two people on your side. They want you to succeed. So just keep that in mind. Other resources that I have for my clients, I've got movers, I've got inspectors, I've got credit repair people. If you're a senior and you're wanting to move into some senior living, I've helped people do that in the past too. I am taking on new clients. Thank you for asking. But we can talk about that at the end. We can talk about that at the end. Thanks for asking. Okay, so that's quick Q&A. So let's get into the mistakes. We talked about process. So number one is ignoring home buyer incentive programs. Okay, this is not just for new home buyers. Existing owners, there's incentives out there for them too. So a couple, sorry, not a couple, criteria. This is the main criteria that could affect your eligibility on some of these home buyer incentive programs. Again, having a good local mortgage person with access to lots of products out there and potential lenders. So the products and the lenders, not all of them have all the access. So again, not just a link at the end for scheduling with me, but my go-to lender is Roger Gettler at Guild Mortgage. And I'll have a link there. You could talk to him and talk about getting pre-qualified as well. Okay. He's my go-to lender. In fact, he's helped me and my wife on a house. It was great. Here's a couple of quick examples of some home buyer program examples. So that the Guild Mortgage zero down mortgage, this is basically an FHA first mortgage with some plus a second mortgage that's got down payment assistance, and it's in the form of a repayable lien, so you don't have to pay it back. And hopefully, I think there's programs where you can get that dismissed down the road. Another nice one is the MFA First Home First Down. This is for first-time home buyers, and it's basically on single family properties, and it's a down payment assistance second mortgage loan for first-time home buyers. So when people are struggling to save up, a lot of times you have to have 3 to 5%. And if you're talking about a $300,000 home, that's $15,000. Not everybody has that laying around. So you can get down payment assistance. These are good programs, okay? Let me talk real quick about the different types of mortgages. I can tell you 99% of the mortgages out there are going to be conventional, FHA, or VA. I've got USDA listed on here, but what you're going to find is USDA loans have better terms, but they're really kind of geographically restricted. So you're going to find them in rural areas or maybe out on the reservations. You might be able to get USDA loans. Let me put this way. When I asked my mortgage person, Roger, about USDA loans, he's been doing it for more than 20 years. He has never once done a USDA loans. So that should tell you right there. They're few and far between. I will say this, I do have a link at the end. I know I mentioned it's kind of geographical, but there are some homes in Bernalillo that I think fit into that criteria to qualify for USDA loans. And if you see a house there and you like it, a USDA loan has great terms, really good terms. Something to keep in mind as we go forward. This is a bit of an eye chart, but it's got a nice comparison for conventional FHA and VA. Again, I mentioned 99% of the loans out there are one of these. Now, if you could go left to right, I would call it good, better, best. If you can qualify for a VA loan, then get it by all means. You're going to have no down payment. You're going to have the best rate that's out there, no mortgage insurance of any kind. You do have what's called a funding fee, which is it's a kind of a flat fee that they charge at the beginning, but still, it's the best of both. And then on conventional and FHA, a lot of first-time home buyers are going to get those FHA loans. And it's better for folks if you've got maybe a credit score under 700 or even under 620. The one thing you have to keep in mind though is on those types of loans, you are going to have MIP, which is a mortgage insurance policy. So basically, your lender is going to require you to have an insurance policy where you're, for lack of a better term, you're betting that one day you will default. And it's silly. It's ironic that you have to have that. You have to have that. Okay. The tough thing on FHA loans, you have to have that for the life of the loan. Now, over on the conventional loans, those are gonna be more for folks with in higher dollar properties, folks with higher down payments, older folks that have more experience, and you're gonna have similar rates to FHA. Sometimes you have to have little flicker of the light there. Sometimes on those loans you have to have PMI, which is another mortgage insurance, private mortgage insurance. I'm sorry. So if your loan to value ratio, let's say the home is valued at 300,000 and that's what it appraised at, and you're getting a loan for if your loan is for less than 240,000, which is 80%, then you don't have to get it. You don't have to get that PMI. So there's a little more flexibility on the conventional. There's a little more help that you can get on FHA. There's pluses and minuses here on all of them. And then VA is typically going to be your best. So again, it mentions MFA here, the Mortgage Finance Authority of New Mexico, established in the 70s, and their goal is just more home ownership for New Mexico residents. This is a bit of a fun page. So what can you use? What can and can't you use for your down payment on closing costs? So these are typical questions that people might ask. Can I use my 401k, my retirement account? And the answer is yes. Yes, with an asterisk. That asterisk means you could have some tax implications from using retirement accounts because a lot of those are tax deferred. You didn't pay taxes on them when you got paid. So just check with your tax advisor before you try to use those. Gifts, absolutely. The first house I bought in 2001, when I first moved to Albuquerque, I had a cash gift from a relative, helped me get it done, and it was great. The one thing, and I'll mention this at the end, the one thing is anytime you get cash from wherever, get it into the bank as soon as you can. Don't put it in the freezer. Don't shove it under the mattress. The underwriters down the line, they're going to want to see that, you didn't get a windfall of cash that you've been saving. It's been in the bank. Okay. So get money in the bank. So stocks, bonds, and cash. Again, especially stocks and bonds, you could have tax implications. I can talk good today. So talk to your tax advisor, talk to a tax person who knows any tax implications you could have there. Can you put down payment on a credit card? So that answer is no, you cannot put a down payment on a credit card because it's basically another loan, another debt, and typically you're going to pay higher interest on a credit card anyways. Can you get another loan? This is a yes and no. It says no for you to get another loan, but I can tell you if you're working with a good mortgage broker, there's programs out there where you can have a second loan with your mortgage. That's a different animal, and they can do those. Okay. Undocumented cash. Oh, we had a garage sale last weekend and we sold grandpa's truck for $10,000, whatever. Okay. So undocumented cash. The answer is no, but I will tell you this. If you do have cash from something like that, get it in the bank. I mentioned that earlier. Get it in the bank. Try to keep those deposits under 10,000. You don't want to get the attention of the IRS. Okay. So mistake number 2, not getting pre-qualified. So we're going to talk a little bit later about the difference. Actually, I think it's the next line. So you want to get pre-qualified before you go house hunting. Bottom line, you want to use a local mortgage person versus a national brand. National brands, sometimes they're good, but they don't know our local market. A lot of times you're going to be talking to somebody in another zip code, another area code, and you talk to a different person every time. It can be a hassle sometimes. I recommend people go local. So, real quick, let's talk about pre-qualification, pre-approval, and a rate hold. So those first two, they're not the same. And here's the difference. So your pre-qual, basically, this is kind of early and informal. This is before you go house hunting with a realtor, and this is something that you're going to do ahead of time. The output of that is you're going to get a pre-qualification letter. You want to share that with your broker because if you do get to a point you're going to put it in an offer, you want to have that pre-qualification letter. You want to attach it to the offer when you send it over to that seller. And what you're doing is you're communicating that I'm ready to buy. I've already talked to a lender. I'm ready to go. And it makes that seller, for example, if they got your offer and they got the same offer from somebody else, but they don't have a pre-qual letter, yours is going to win. You've got better negotiating power there. So that's something to keep in mind. What's a pre-approval? Okay. So this is when the loan package is taken from your local mortgage person and they hand it off to a larger lending institution. It could be a bank. It could be a big financial firm on Wall Street. The list goes on and on. Okay. So they're going to hand it off to underwriters. The whole loan package is complete. And that signals that the buyer, the buyer's ready to get the loan done. I've got another slide. I'll talk a little bit about the role of the underwriters and what they do. So hang tight on that. Real quick, one other thing I want to talk about. Pre-qualification early. Pre-approval is when it goes to a lender. The pre-qualifications are what they do is they'll do what's called a soft pull. They'll get your credit score. This typically does not affect your credit score when they're doing a soft pull in the pre-qualification. When it does go to an underwriter and you're in the pre-approval process, that is going to affect your credit rating. It's usually just couple of little points off your credit score, but you build that back up pretty quick. So just a heads up on that. It's a deeper dive into the history and your current debts. And like I said, it does ding your credit just a little bit. Lastly, let's talk a little bit about rate holds. So this is something that you want to mention to your lender in the pre-qualification process. You'll want to mention to a lender, should I get a rate hold? And what this does is, it's just going to hold your rate. If they're anticipating rates going up in the next 30 or 60 days, you can lock in that rate, and instead of 6.7, you get locked in at 6.55 or 6.6. You save some money over the life of that loan. So early in the process, ask the mortgage lender, is it a good idea for us to do a rate hold? And can we do that? So those are good questions. Again, stay tuned till the end. I've got a link for Roger at Guild Mortgage and for me to set up another meeting. So a little bit more about pre-qualification. The main thing is, these are the factors that they're gonna look at: your credit, your income, down payment, your assets, your debt. Mostly, you want to find out, what you can afford, what you can buy. Again, I got this line in here about your increases your bargaining power. It just signals to a seller that you've already gotten pre-qualified, and you don't have to have that worry about getting beat out by somebody else that does have a lender letter, right? So that's a good idea to do the pre-qualification. So I mentioned underwriter review. So this is another thing to keep in mind. So your mortgage person, and they're probably better at explaining this than I am. I'm a realtor. I'm not a lender. I'm not a mortgage person. But when the underwriters, when it goes over to the lending institution, it goes to an underwriter, and they're really going to look closely at your ability to repay the loan, your willingness to repay the loan, the collateral, so your credit rating, your debt to income ratios. What assets do you have? Do you have any other houses, any other property? And I'm not talking about a car. I mean, unless it's a 57 Chevy that you can sell for $100,000 at the auction. A car is an expense, and that's that. Okay. So that's underwriter review. A couple tips. I think this is the last slide I've got on loans, but this is some do's and some don'ts. And it's pretty basic on the do side. Stay steady, steady as she goes. Okay. Pay your bills. Don't change jobs. That's actually on the don'ts, is really, pay your bills, don't change jobs, don't change banks, no big financial moves. So nice and steady, no big stuff. You don't want anybody to go out and buy a car, you know, the week before you're going to close. That will throw a monkey wrench in, because now you've all of a sudden changed your debt to income ratio, and it could cancel the loan. So steady as she goes. No big financial moves. Okay. Let's get into mistake number 3 while we're on the subject of financing, using your banks. Okay. Now, look, nothing against banks. Maybe you love your bank. Maybe some of you on here work at banks. I don't know. I don't know. And look, from my personal experience, my mortgage is through a bank. I don't want to say which one. We did a refi in 2022 because we got the best deal from our existing bank that was holding the mortgage. But it was painful. It was long. Everyone we talked to on the phone was out of state. They requested more documentation. It was painful. We got it done. It took a couple of months, but we got it done. So on banks, there's 3 main points on banks that I want to make here. Okay. Number 1, it's more likely that you're going to have some additional fees and discount points. In a nutshell, keeping it simple, discount points are fees that you pay upfront for a lower rate over the course of the loan. Okay. So instead of paying interest over 30 years, you might pay a big chunk of money up front, and then you get a lower rate. Sometimes it makes sense. Sometimes it's a better deal. Sometimes it's not. You may not have Number two is you may not have any buyer assistance programs. So I mentioned MFA, Mortgage Finance Authority of New Mexico. Some banks are not don't give up first-time home buyer qualification stuff through MFA. So not all the banks are tied in with them and offer those products. Lastly, number three, my experience, and I mentioned that earlier, usually you're just a number. Every time we called a bank when we were doing our refi 2, 3 years ago, I talked to a different person every time. So you're just a number, unfortunately. So uh again, get a competitive quote from a local mortgage originator. Again, in pre-qualification stage, it's only a soft pull, so it shouldn't hurt your credit score. The other main point that I want to talk about here in comparing is you always want to look at the interest rate versus the APR. Okay. Your interest rate, that's the fee you pay for borrowing the money, period. That's the interest rate. That's just the interest on the money. The APR, the annual percentage rate, that's what you pay, that's the percent with all the other fixed fees added in. So it's usually, for example, it might be, 6.6 versus 6.875 on the APR. So you can look at those from lender to lender and you can see who's charging me more. So it's a good quick comparison between loans. Okay. So next. Mistake number four, buying directly from a builder. There's a lot of great builders out there, but they have these tempting incentives like, oh, we'll give you all the free appliances, or we have great lending with low rates, or oh, we'll upgrade the audio video or whatever, or we'll upgrade you to marble. So there's a lot of incentives that they use to entice people to work directly with them. Okay. It's tempting. It's tempting. But buying straight from the dealer, good gosh, buying straight from the builder. A couple things to keep in mind. Number one, don't sign anything. I mean, you can sign in, but that's it. And if there's a little space that says, "Do you have a broker?" Maybe just put TBD. Okay, because you want to get um, you want to get a broker because they're going to be on your side. Keep in mind that the person at the builder, they work for the builder. Okay. Um, a lot of times you're going to want to get a second bid from a local mortgage lender instead of financing with the builder. And again, as I mentioned, having a realtor, they know the process, they know how to do inspections and walkthroughs, and most builders in town will pay the buyer broker commissions. So it's another thing to keep in mind. Mistake number five, skipping the home inspection. Look, this one's huge to me. This one's near and dear. Okay. So you always want to look at the core functions of your house, your roof, okay, your windows, your electrical, your HVAC, the water and the sewage. How old is the house? What future expenses can we expect here? If you don't do inspections, you could have future recourse. In a couple of years, you could discover, oh, there's mold in the attic, and we didn't know that. If we would have had an inspection, you would have found that. A couple things to keep in mind. This is an area where I see the most terminations from buyers. The purchase agreement that we use in New Mexico, that is the template from NMAR, which is New Mexico Association of Realtors. It's designed to protect buyers. There's multiple off ramps for buyers. And I mentioned earlier the contingency, the hurdles. You get to a hurdle and there's something you don't like, and you might ask the seller to make a repair or something else. It's a long list. You don't even have to ask. If there's something in inspections you don't like and you want to terminate, terminate. Okay. The only thing you have out of pocket at that point is the cost of the inspector. Keep in mind, whenever you do inspections, you're always going to pay at the time of inspection. That's not something you can push off until the end. Lastly, Two that I recommend to everyone is a general inspection and a termite inspection. Those are the very basics. There's a ton of other inspections you can do, but keep in mind they all cost money. Okay. But a lot of times they'll be revealing and you will know what you're getting into. And right there and then, you can ask that seller to make repairs and find out if they will. More times than not, a lot of times the seller is going to have a good idea that, oh, maybe the roof needs to be repaired. I've gotten sellers to put a whole new roof on houses before because they knew. So don't skip the inspections. Lastly, again, I mentioned it earlier, all of my buyers get a home warranty at closing. So it's another good peace of mind when you're doing that. Okay. Did you get a home warranty in red? So I got that on there. Don't forget. Um, Skipping the document review. So this can be maybe the more mundane area, but this is another area where having a good realtor goes a long way because we're going to know oddball things to look for. Um, Document review. Let me just put up this list here. It's a bit of a list, okay? So going down the list, the seller's property disclosure. This is required. The seller's supposed to tell you what they'll admit to. Oh, we had a roof leak back in 2017, and we had it repaired, and we had the roof repaired, and we've had no other problems. That's a typical example of what you might see in a seller's disclosure. But you can have all kinds of other things. Sometimes sellers will say, "Oh, we put a new roof on in 2022." And that's not really a disclosure of a problem, but it's a positive thing. Anyways, you get the idea. You typically get that a few days after you get under contract. Some sellers will put it out there ahead of time just for transparency purposes. The title commitment. So the title commitment comes from the title company. And in a nutshell, the title commitment and the title insurance are generally paid for, not the title insurance, but the policy is generally paid for by the seller. They're going to pay to ensure that they are transferring a sound and solid deed to you. You don't want Uncle Bob to come out of the woodwork in 6 months and say, he won this property in a poker game and here's the deed to show it, blah, blah, blah. You don't want stuff like that. So you want to have the title commitment, title insurance. Typically, you want to read through that and see what's in there, what the restrictions are. It's a legal document, but it's easy enough to understand. Okay. CCRs. So these are the covenants, conditions, and restrictions, the CCRs. And these are basically tied to the property from the get-go. It could be neighborhood covenants where you can't build a casita in your backyard. You could have some other restrictions where, let's say, for example, you want to open a daycare out of your house. There might be a restriction against having a business in your house, things like that. So you want to read those CCRs in detail, okay? HOA and condo docs. So this is another one where you definitely don't want to ignore these. I mean, if you want to put your prize roses out front, there could be a restriction against, planting your own flowers or your own plants or anything. It's weird. HOAs can be a giant pain. They can be easy. You could have a restriction against parking cars on the street. You never know. You got to read those before you go to closing. Okay. The property survey, the basic one that we have in New Mexico is called an improvement location report or an ILR. Again, it's going to be up to the seller to deliver this to you. If there's not a good one, the seller is normally going to pay for a new ILR to be done. This is one where you want to look for example, you want to see if there's any easements, maybe cutting under the corner of your house. The problem with easements is if you have had a room addition put on a house and maybe it wasn't done with building permits or city inspected, they could build on top of an easement. And what happens is if that utility company ever has to come in and they can't get to it, going under on the side, and they have to tear down the corner of your house to get to that utility underneath there, you're on your own. They're not going to build it back, and um, your insurance company is sure as heck not going to cover that. So again, watch for those easements under corners or things like that. Ask questions. It doesn't. It's not embarrassing to ask questions. Okay. Inspection report. So I mentioned this earlier. I always recommend a general inspection and termite. There's a long list of other inspections you can get, but you want to read those reports, and they're typically written. They're typically very readable and very clear. Okay. The appraisal report, if you're getting a loan, your lender is always going to do an appraisal because if you default on the loan, they're going to repossess the house and they want to make sure that the house has value and they can get their value back. So take a look at that appraisal report, okay? The closing disclosure settlement statement. These are documents you're going to get from the title company about 3 days before closing. So that title company and your lender, they're going to work together to get all the numbers on that one page, and they're going to send it over to you. Bring a check for this amount, and it's got all the numbers laid out. So you want to review that. Again, if you don't know what you're looking at, ask questions. Okay. So that's all the mistakes I wanted to go over. This is just a quick recap. So don't ignore those buyer incentives, getting pre-approved, pre-approved, pre-qualified, I should say, actually. Um, don't just go to your bank for a mortgage. Use a local mortgage broker for your loan. Don't buy directly from the builders. Have an agent represent you. They have your best interests in mind. Don't skip out on those home inspections. That can be a very costly mistake that could cost you down the road. And again, lastly, take time to review all those documents. It's too expensive of an asset to just slough things off. Okay. Those are the 6 biggies that I preach to everyone. So I think we are at 44 minutes. I'm right on time. So thanks for attending my webinar. I hope that this has been time well spent for you. I hope you feel a little more confident. Give me a couple comments in the chat if you do. Is it fair to say that what we covered today was valuable to you? The tips are good. I don't want buyers to make costly mistakes. Oh my gosh, we don't want to do that. Never want to do that. Okay. Again, I mentioned at the beginning, I mentioned it a couple times. If you're interested in taking the next steps with a competent realtor that handles, oh, thank you, that handles new buyers or existing buyers, if you've already owned a house, then I help people lay out a roadmap, get you started with confidence. Okay. Um, there's a QR code. The scheduling app looks a little bit like that. And lastly, this is the last slide. So again, I mentioned that bigger one on the top right, that is my scheduler. Feel free to click on that, schedule time. We can hop on a call for 15, 20 minutes. Just talk about where you are, where you're going, what your plan is. I can help you map that out a little bit and help you figure out, is this a good time? Is maybe later a good time? So click on there or scan it with your phone, get something scheduled. Let's take a look at it. Now, if you are ready to talk to a quality multi-decade loan officer, Roger Gettler at Guild Mortgage is awesome. The dude's got 20 years plus in the business, and he is an outstanding mortgage lender. So you can scan that and you can see his information. You can get scheduled with him. I mentioned earlier the USDA lending map for New Mexico. That's a scan bar down or a QR code down there for that. I mean, if you're looking to get a fantastic loan, USDA loans are great. And let's say, hey, Bill, Bernalillo is great. I have friends that live out there. I work out there, whatever. Take a look at it. I know there's some Bernalillo properties in there that qualify for the USDA loans. So there you have it. Where are we at? 7:46, 46 minutes, right on time. All right. Well, I want to thank everybody for coming out tonight. It's been my pleasure to hopefully make you feel a little better, have a little more confidence, keep those mistakes in mind. But again, if you got a good broker, they're going to be looking out for you. I hope you found this valuable. I look forward to meeting up with any of you down the line. If any of you guys has a question, you can unmute and ask any questions at this point if you want to. Otherwise, that is it. It's actually getting dark out. I think fall is coming, everybody. Anyways, thank you for coming. I'm going to leave this up for a few more minutes if you want to scan that and schedule anything. Okay. Thanks for coming out, guys. Take care.